Good morning, everyone.
Good morning.
Good morning.
Morning.
I think we'll go ahead and get started. And today on the phone we have Alice Miller from Financing for Development. I wanted to know, Ian, do you want to say any words to start us off, or should we hand it over to Alice? Okay, I'll let you take it from here, Alice.
Okay, thank you. Thanks so much, Anita. Thanks again, everybody, for joining this morning. I wanted to, first of all, start by thanking RHSC for supporting Financing for Development in this work and for organizing today's webinar. It's really good to be able to share the results of this study with all of you. And we hope that the information presented is going to be useful for everyone, and we do look forward to your feedback and further discussion. So I'd like to start out by just talking a little bit about the development financing landscape. And over the last several years, there have been some significant changes in the development finance landscape. Even though traditional donor development assistance has actually increased in nominal terms, its share of the overall development finance architecture is shrinking and is expected to level off after 2015. Other types of development financing flows, particularly private flows at market rates, are taking up a much larger piece of the pie, particularly as there is increased pressure to, quote, graduate countries other than those that are the very least developed from receiving official development assistance. These countries are increasingly being asked to find internal domestic resources and other private resources to fund their ongoing development needs. The question is, how can the development community harness these flows to support shared development goals? So we undertook this investigation into whether additional work in the impact investing area would be useful in building a more competitive reproductive health marketplace. Despite marked growth in recent years, the reproductive health commodity market still does not represent a fully competitive landscape, with a relatively small number of large RH suppliers dominating the market. F4D, with support from RHSC, recently undertook a study to determine whether there might be an opportunity to connect private sector impact investors with emerging reproductive health supplies manufacturers in order to promote competition in the market with the goal of improving quality, choice, and affordability. There are a wide variety of entities that undertake impact investments, and each of them has its own criteria for determining where and how to invest their funds. However, by definition, all impact investors consider both financial and social criteria in making their investment decisions. While these investors are seeking social impact returns for their investments, they are also looking for various levels of financial return. Some investors simply want to preserve their investment capital, some want limited, below-market financial returns, and some are actually looking for market-level financial returns. Many emerging RH suppliers got their start with funding from donors with social impact specific to the reproductive health space as the primary goal of those donor investments. As these suppliers move toward operations on commercial terms, they may find that they need additional capital. Different firms need different types of capital, however. Some need access to short-term working capital, some need medium-term investments, and some need longer-term patient capital injections. As these firms seek additional capital, they need to understand the specific financial requirements of the more market-oriented impact investors. Both sides need to learn each other's languages. Basically, they need a translator. By translating the social impact potential of investing in emerging market contraceptive manufacturers, it may be possible to facilitate growth of market and increase competition, hopefully leading to lower prices for high-quality products. There is currently a need for more supplier diversity of quality-assured commodities in the reproductive health commodity space. Increased investment in emerging reproductive health suppliers would be a win-win for all stakeholders, suppliers, investors, beneficiaries, and the market as a whole. Emerging manufacturers require additional capital to improve quality while maintaining affordability. Impact investments would provide them with that additional capital. Impact investors are seeking opportunities that offer both social and financial returns. Health commodities would bring those returns to investors. Beneficiaries are looking for increased choice and equitable access to affordable and quality-assured reproductive health commodities. Stronger suppliers will be able to deliver those commodities. The reproductive health market as a whole is seeking increased incentives for growing demand, supply, and resources for a sustainable market. Investments in quality and affordability will help to strengthen the market. During this first phase of the impact investing workstream, F4D undertook a market-based approach to determine on a preliminary basis if it could first attempt to identify investment criteria that could be used by both investors and manufacturers to measure and evaluate the social impact potential of investing in emerging market contraceptive manufacturers as they relate to the RHSC pillars of affordability, equity, choice, and quality. And secondly, we wanted to determine if there would be any interest among manufacturers to receive investments and any appetite among the spectrum of impact investors to make them. So what you're going to see on this side is a sampling of some indicative investment criteria that we came up with that could be used and understood by both impact investors and manufacturers alike to measure and understand an investment's social impact potential. It's important to understand that there's no single list of impact investment criteria that all investors currently use. Financial criteria are more consistently defined and used due to the maturity of financial analytic tools used to evaluate investments. Not all impact investment criteria will be relevant in every situation, and there may be additional criteria not included on this list that are. A final list of indicative investment criteria for use in evaluating emerging market contraceptive manufacturers' impact was sourced during our study from the IRIS Taxonomy 3.0, which is basically a taxonomy of standards that was compiled by GIN, the Global Impact Investing Network. F4D compiled its list of criteria by pulling metrics from that taxonomy that are relevant to emerging markets' generic contraceptives manufacturers. Once that list was created, each metric was screened and mapped to the appropriate RHSC pillar. Some of the IRIS criteria map to one pillar, some contribute to more than one. Many of those criteria did not apply and therefore were not included on our list. F4D interviewed 18 individuals across the investor, manufacturer, and landscape stakeholder sectors and further distributed a survey to the same sectors to elicit more feedback from the surveys. From that information, as well as from desk research into investor interest and investment strategies, we came up with the following information. We identified 78 potential investors, and those potential investors currently have $74 billion in assets under management. 9 out of the 10 manufacturers surveyed showed some interest in receiving investment, and 4 investor-investee pairings emerged organically from the discussions. The 4 opportunities that coalesced during the study included a variety of manufacturers and distributors with varied capital needs. So I'd like to wrap up with some high-level takeaways from the study. First of all, impact investing is a matchmaking process in order to determine what types of capital needs a company has, whether it needs debt, equity, short-term, long-term capital, etc. We also discovered that there's no single set of either social impact or financial criteria used by investors to determine which investments they want to make. Finally, we also determined that it's important that the two sides, both the potential investors and potential investees, really learn to speak each other's language, since they tend to be coming from different standpoints and different viewpoints. We've also think that using criteria tied to RHSC's 4 pillars, investors can get a better sense of the social impact that their investments would have and help with that discussion and with learning the language. Companies, on the other hand, need to understand that investors will not only be looking at social impact criteria, but they'll be looking at hard financial criteria, such as how long a company's been in business, strength of management, and the company's potential to generate future financial returns. So what can RHSC and the community do to move the work forward? Some ideas would be that we could advocate for the involvement of potential investors. We could provide technical assistance support to manufacturers to get them ready to be good investment targets. We could support the further development of impact investing tools such as additional indicators, etc. And we could possibly support active convening and or matchmaking for facilitation of investment transactions. So those are the overall findings of the study, and I'm happy to take any questions or hear comments, etc. So thank you very much for listening. I appreciate it.
The conference has been unmuted.
Thank you, Alice. That was a great presentation, and I think you've laid out very nicely what roles the coalition could play going forward. And so we wanted to now open the floor to a discussion around other additional roles the RHSC could play or feedback on what is presented here in terms of next steps, and also gauge some interest from the manufacturers who've joined us on this call. So I will open the floor now. If you're interested in participating, just jump right in. I think we've unmuted everyone. So when you're not speaking, please mute yourself, but if you'd like to speak, just jump in.
Good morning. This is John Townsend. I had a question about the market of information about the availability of resources for impact investing. Do manufacturers around the world, other than perhaps those that are the large pharmaceutical companies, have access to information about where impact investors, how they can be contacted, what their requirements are? Is there an easy marketplace for that?
Yeah, John, thanks. This is Alice. I think the answer to the question is there's no real easy marketplace for that, unfortunately. One of the best resources that we did find was GIN, the Global Impact Investing Network, which has its members are mostly investors, and they do provide a lot of information about what kinds of investors are out there, what they're interested in, and they do some convening. But I think that this is one of the things that we found was that if you are a manufacturer looking for investment, it's not always an easy thing to be able to identify a potential appropriate investor. And so that's one area where we think that particularly if we're interested in helping the manufacturers in the reproductive health space move this forward, that we might need to think about being proactive in that kind of information sharing and convening.
Yeah. May I? Hello?
Yes.
Hi. May I jump in here? Hi, this is Martha Brady at Population Council. I'm following on John's comments. In the same way, I think that would be a good role for you all. But one of the things I'm wondering about, do you have, or is it possible in a way to map out both, impact investors, manufacturers, and then, and then geography, essentially? I don't know, but my gut, my thought is that some people are interested in different parts of the world more than others, either because, India is a large market or whatever. And so I'm wondering, in this whole thing, whether you can do an overlay of kind of geography of interest also?
Yeah, this is Alice. That's a good question, and I actually do think that would be possible. We did in the initial study kind of an overview of, as I said, a large number of investors in the space, and did try to get a feeling from the ones we spoke with, whether they were interested in not only this sector but also, geographically. And so I think that information can be gathered. We have a good start by getting kind of a list of the investors, sort of all the way from smaller family foundations all the way up to very large, more commercially oriented investors. And I do think that information could be gathered. It would take some time and effort, but I think that is information that could be gathered.
Yeah, thank you. I have one more question. Sorry, I don't want to. Are other people on the line? There's a lot more people on the line, so.
Go ahead, Martha.
Yeah, sorry, just one other question. When you pose the questions to your in your interviews, did you? I'm curious to know whether these impact investors are, you said interested in this space, the reproductive health space, as compared to what?
Well, so that's
there's a big other what out there, and I'm curious.
There's another what. We started with whether they were interested in the health sector broadly, and I think that there are quite a few investors that have indicated that they would like to make investments in the health sector broadly. Now we know that health commodities and then reproductive health commodities is narrowing that down even further.
Right.
And I think a lot of some of the investors we talked to had not told us that they were interested in the health sector, but they hadn't really focused on, number one, either commodities or number two, reproductive health commodities. So I think that there's a little bit of a sales job that would need to be done as well.
Yeah. Okay, that's my thank you.
Great. Any comments from our manufacturing partners?
Hi, this is Mukul here from Pune.
Hi, Mukul.
So of course I've been a part of this conversation earlier also, and it's heartening to see that it's moving forward. It's just that I'm curious to know as to what's the next step from here and how it can be expanded further to leverage from here and get more of these connections done. So that's my question on this.
Yeah, thanks, Mukul. I'll answer, and then I'll let Anita jump in. We did, after the Oslo meetings, have some discussions with RHSC, with Anita and Ian, on some ideas for moving the work forward, and so we have started to think about that, and F40 is hoping to put forward some suggestions possibly early next year. I think we need to think very carefully about what work would be most useful and basically sort of get us the most bang for the buck, if you will. So we certainly, as we move forward in trying to come up with a further work plan, would want to get input from the broader community, including manufacturers and other stakeholders, so that we make sure that we're sort of focusing in the right way. Anita, I don't know if you want to add anything to that, or Ian?
Sure, Alice. I'll just jump in and say that given the positive information that came out through the original survey, I think we, as a coalition, see the value in pursuing the phase 2 that had been outlined from the very beginning, which is to see what role we can play and start making these connections. And I think that, as you've already mentioned, we need to see what our comparative advantage is in doing that and how we might be able to organize that and find funding for it. I think there are a lot of people out there who are looking for good ways to spend their money, and if we can just plug them in the right way, then the coalition will be using its levers how it's meant to be used? I know that sounds very vague, but I think we see the potential for this to be a place that we can commit to in 2016.
Just to add on to this, a successful connection could really mean a lot for RHSC itself, because that would get a lot of the manufacturers interested in participating more in the activities of RHSC. Because as from the manufacturer's perspective, the funding is an important issue, especially for the smaller guys. So if we are able to leverage this and get something going and have some successful connections done, then that would generate a lot of credibility for RHSC and and being a part of RHSC. So that's just to add on to what you have just said.
Thanks, Mukul. And actually, one of the things that we were talking about, and it would be good to get your feedback on this, is if we were to create a formal work stream in MDA, which we already really have, but to get now more people other than just F4D on board, should we take a few suppliers that have projects right now that need to be funded or interest in getting funded and start piloting the work with them and moving forward with a specific group of people, or should we keep it broad and open, or can we be doing both? Do you have a perspective on that?
I think both could be interesting. So opening it up, from a neutral perspective, I think it's important to get some success stories. So once you have a couple of success stories, it generates a lot of interest. This could also become a self-funding mechanism. So let's say in case if you have a successful connection, for the role being played by RHSC as well as F4D, there could be some sort of, I would say, brokerage or commission or whatever you can call it, which can be charged. And that could help for, creating further connections and getting, and becoming sort of an investment bank of its own. So just to say that. So the key is to get some successful connections done and some success stories around it.
Okay, great. Are there other comments from the phone or questions for Alice?
This is Susan from Women Deliver. I have a question. As you're thinking about next steps, are there other sectors or models that you are drawing from or that you found that have really sort of made further headway than this community has on impact investing?
That's a good question. I think that impact investors have broad interests in investing in all kinds of sectors, and all the way I think from kind of social marketing investments all the way through to sort of large infrastructure. So I think that, and you guys are better experts than I am, but I think that there are special circumstances around health commodities, particularly because of the high costs of regulatory hurdles and things like that investors are a bit wary of, and that pose additional risks, rather than maybe investing in agriculture or well, there are risks there too. But I wouldn't say that there's any particular sector where investors have more interest than others. It seems to be really across the board. But again, I think that in this area, one of the things that is important is getting investors to understand both the risks of investment in this sector, but also the potential upside. And so it really is very important for getting the investors to understand the business model and getting the manufacturers to a point where they understand what investors are looking for particularly from a financial perspective as well as a social perspective. I don't know if that doesn't really answer your question, but I don't think there really is a concrete answer.
Alice?
Yes.
Hi. Sorry, one more question. Martha, again? Sorry.
Sure.
And then no more. Just on that point, I think making the case actually is important, right? And sort of what's in it for that. And I'm curious about those of us who have worked for a long time in this arena, sort of the temporal element to all this. And, and the stomach, the appetite for that, because the impact can be profound and important, but it's not tomorrow. So where is that part of making the case? Is that just there's no appetite for that? Are there other ways to have what I would call, the nerd researcher in me would call, the proximate determinant, like almost there, but not quite the impact yet, sort of benchmark, if you like?
Yeah, no, I think some investors are really willing to sort of invest patient capital, which means they're willing to be kind of in there for the long term, particularly if they understand the fact that the social impacts are going to be sort of on the longer term in order to be able to actually do any measurement. Part of this also is that the investors struggle with how to measure the social impact, which is one of the reasons why we thought these indicators might be helpful. So that if they see that, yes, you can measure the impact, it may take a while to measure the impact, but if you hang in there long enough, you'll be able to, then you might get some additional interest. And as I said, there are some investors who are willing to be in there for the long run and some investors who are less willing to do that and are more willing to put up shorter term capital in the form of loans, et cetera. So it really is a matchmaking process. It really is making the business case, and that's just and that can be done, I think, in a systemic way. But then also, as Mukul mentioned, it also has to be done on a case-by-case basis so that you can have successful transactions.
Yeah. Thank you.
Hi, Alice. This is Soumya.
Hi, Soumya. How are you?
Good. Thank you. Great presentation and great discussion so far. I was wanting to revisit the principles for which this activity took place. The idea was to encourage new manufacturers to join the field, correct?
Mm-hmm.
So, and the purpose is therefore that we would have greater choice of manufacturers with good quality products.
Right.
Now, when we talk about new manufacturers, we would like them to expand the range of products. But then, how do you think that plays out? And maybe Mukul could jump in here as well, as to refinements made to existing products, whereby we have number of new manufacturers making the same categories of products versus innovations. How does that fit in? Because clearly the risks that are involved in bringing completely new innovative products are different.
Right.
So that's one. Yes, and then I wanted a slightly different question.
Okay, well, let me see if I can answer that, because I think that's a critical question. And I think part of it has to do with what the manufacturer's goals are and what they want to do. And if manufacturers are interested in investing in new and innovative products, they're going to need capital to do that. So it's important that finding the right investor with the right risk tolerance is going to be very important. But being able to adequately communicate with the investor what the risks are so that they can measure those risks and weigh them appropriately in order to determine whether or not to make an investment. And I think this is an area where impact investing can be critical, because with high risk comes the possibility of high impact. So again, I think getting back to explaining the risks, explaining the potential impact, and providing some tools that the investors can use to measure those would be very helpful in getting those kinds of investments done. I don't know if anybody else wants to jump in there, but that's kind of my view.
Yes, Alice. So I think I could also add in to answer Soumya's question. Soumya, you were talking about existing products, or let's say innovating or tweaking the existing products versus having something absolutely new. Is that correct? Am I correct in assessing that question?
Yes, you're right.
Yeah. So I believe that from the regulatory standpoint of view, it's a very important aspect that manufacturers do consider when they introduce new products. So there are times when innovating or value adding on the existing products could also give substantial benefits in terms of impact in the society or to the end user, and that is, I would say, a lower risk that a manufacturer could take versus getting into something absolutely new and not being sure whether it's going to clear the regulatory barriers and also how long it's going to take. So, but from the investor's perspective, quite often what we have noticed is that the investors are looking for many times return. So let's say in case if they're investing a particular amount of money and then they are looking at, let's say, a 5-year horizon, at the end of 5 years, they would be looking at exiting off the investment with substantial gains on their original investment. So these are the typical venture capitalists that we would be talking about, who would be looking at high returns and high risk. From the impact investment perspective, one would need to look at the profile of these people and understand as to what is the kind of the risk appetite that they have, whether they are looking at sort of substantial impact happening maybe 5 years down the line, a potential substantial impact happening 5 years down the line after the clearing the regulatory barriers, versus maybe having a smaller investment and a quick return is something which needs to be understood. So probably Alice could shed more light on this in terms of what has been her assessment of the risk appetite of these impact investors.
Yeah, thanks, Mukul. I think it varies, really. I think some of them have high risk tolerances, some of them have lower risk tolerances. Some of them are looking for high financial returns. Some of them are not looking for market rate returns. They're willing to take less than market returns. So again, it goes back to trying to find the right investor to match with the manufacturer.
Hi, this is Denise Harrison from USAID, and I just wanted to build on this discussion by asking, did you see or did you meet with any investors interested in fertility awareness methods? You're talking about high risk, high return. My understanding is right now in at least the U.S. market, there are over 200 apps for FAM. And I don't think this is something that necessarily requires a high investment, but it could have a relatively high return. So Alex could say something about the investors, if anyone was interested in FAM, and were there any manufacturers looking at FAM as well?
We didn't focus specifically on that, and so unfortunately I cannot comment directly because those questions were not asked. But however, that's certainly something we could take into account in any future work. And I can actually go back and look at my notes again to see if anything cropped up. I don't remember anything off the top of my head, but I could certainly let you know.
Okay, yeah, it was just out of curiosity and going back to Stella's question about innovation and how do you invest in that, and whether, how high of investment is needed. Sometimes it is high, sometimes it
yeah.
is.
Yeah.
Hi, this is Elizabeth with ICEC. I had a similar question to the previous one. Sort of low risk, high. I'm hearing a lot of honking in the background. Looking at low risk but kind of high volume products like emergency contraception could be an example of where there's actually been a lot of entrance into the market, like a ton of manufacturers entering the market without, I think, much investment. Did you think about the kind of the technologies that have been sort of success stories in the market, or were you more focused on the sort of future and emerging potential? We didn't really do any kind of work into looking at what previous. I mean, we did look a little bit at some previous investments that were done, but we didn't really have a technology focus. It was just basically on what had been done in the space. Again, this sort of phase one review was mostly to do kind of a landscaping exercise, and so we didn't ask a lot of very specific questions about sort of specific portions of the market. But again, if there are specific questions that people would like to be addressed in the next phase, then we'd be happy to receive those. Thanks. No, I just think it might be interesting in sort of phase two to see why are so many manufacturers piling into certain segments, not necessarily all the policies, but a lot of manufacturers going into certain areas and then reluctance in others. Is it related to how easy the technology is, or is it more related to the market? It may be a mix. It might just be an interesting kind of comparative case study of the potential going forward. Because I see a lot of differences with different technologies, where you have for emergency contraception and maybe for OCs in general, hundreds of manufacturers coming in. And there must be a lot of facilitators that are enabling that. And what exactly are they? I mean, I think we have our suspicions and our hunches, but I don't feel like that's ever been kind of systematically examined. It could be fruitful, just an idea for the future. I think this is really interesting, the approach so far, so we'll definitely be following it.
Yeah, I mean, those questions are...
Wow. 46 degrees Celsius. Have one for morning. Have one for Wednesday morning.
Excuse me, if you're not speaking, please mute your phone.
Hi. Thanks for that question. Okay.
Wow, we heard a lot there. Can I just follow up on Elizabeth's question? Hi, Elizabeth. It's Martha here. I mean, I think that's an interesting point. I do think though the ease of entering and the ease of tableting, for example, actually plays in significantly in the case of ECs. I mean, EC and OCs. I mean, it's easy to do. It's not a complex technology, and so I think that's a really, really, and it's a low bar to entry, so to speak.
Thanks, Martha and Elizabeth. Alice, do you have any comments?
No, I think that yeah, the barriers to entry, of course, are an important consideration that that any investor looks. Well, when you're determining whether to start up a manufacturing firm, barriers to entry are something you take into account. And I think investors also look at technology from a risk perspective. So I think that's important, and I think it is something that needs to be looked at more closely.
Hi,
Great.
this is Soumya. Can I ask or contribute to the question about risk tolerance? Alice, when you were meeting with all these social investors, did you come across folks who would prefer to share the risk if 2 or 3 of them joined together?
I think that is something that's done, fairly often, depending upon how large the investment needs to be, particularly. And there are some investors that would invest in conjunction with others, but then they actually have to find other investors who have interests that are aligned along with them. Now, and the other thing that can often happen is that a manufacturer or a company will need different types of investments. They may need some short-term working capital, they may need some longer-term equity injections, and they may need some just longer-term debt. So you may have a number of different investors that are providing those different types of debt together, and then they will work, or the different types of investments together, and they will work together to kind of structure a package where everybody can take their slice of the risk, and that does work. I think generally that works in sort of larger, more complicated investments, but again, it could work in this space as well. Did that answer your question, Soumya?
Yes, absolutely. Thank you.
Mm-hmm.
And it had also occurred to me that in addition to the folks that you have on the work stream, you might want to have a few champions who may not be completely market oriented or manufacturing oriented or investment oriented, but who can provide some additional inputs, whether they are researchers or product developers or somebody else.
Mm-hmm.
You might want to have a varied portfolio of folks that you can call upon.
Yeah, that's a great idea. Thanks.
Great. Any additional questions or comments?
Sorry, I don't know. Hi, this is Tracy, Brett. I don't know if this is the right time to ask this question. I did come in, unfortunately, a bit late. But is there a place, if we know of, I was speaking to a manufacturer the other day who was at the UNFPA Copenhagen meeting, and he said it just struck him then. He does misoprostol, and he's approaching pre-qualification, and he has all the right sites, and he's also got a sterile facility that is approved by US FDA, and it struck him then that he potentially has the ability to make oxytocin. So how does somebody like that engage with the community, a manufacturer with the community and with, this type of group to sort of do the early thinking around the investments and if it makes sense or not, or, both in terms of getting funding and also making their own investment?
This is Alice. I might ask others to kind of jump in and to see if they have views, because I'm not sure that I can exactly answer that question. But maybe some of the other manufacturers who are on could address that with some ideas.
This is Anita. I don't know if we have manufacturers that have been in a similar position on the phone right now, but if you'd like to put them in touch, Tracy, with me, I can help maybe plug them in with some of the right people and
that would be
introduce
great,
them also to our GEMS initiative.
That would be great, yes. Thanks, Anita.
But I think that brings up a good point that if we are able to, like Mukul says, show some progress with one or two examples, that this could help encourage additional manufacturers to become interested in this space and to become interested in providing quality supplies to this space. So hopefully it becomes a virtuous cycle that improves the health of the markets and increases the availability of quality supplies. Are there any final questions before we wrap up the webinar?
This is John Townsend again. I had maybe some thoughts about how this exercise might move forward. I think you've done a good job at identifying the issues from the impact investor side and who's available and what the interests are. There are two other elements. One that's been raised before, which is the technology issue, and it might be helpful to do some sort of exercise that would characterize the type of technologies and the different approaches that might be necessary. Because the way maternal health supplies are manufactured and procured, there isn't a central procurement place like there might be for implants, for example. And so thinking about how one might get into the market is much more complex for oxytocin than it might be for a really successful product in another area. That would complement dramatically, I think, and provide a lot more information to potential investors about what the technology issues might be. The second is kind of what's the marketplace. So thinking about the marketplace could be thought about in many different ways, not just national markets, but sub-regional markets and so on. And it may also be thinking about which places are better targets. For example, if half the countries in sub-Saharan Africa will be lower middle income by the next 30 years, are we preparing ourselves or figuring out where would they go when development assistance would no longer be available to them? Thinking about that type of analysis, which is a little different than a country based analysis of markets, and so targeting that a little better might be useful both for the manufacturers to think about what's coming in the future, and that was implied in your first slide, Alice. But also thinking about what is the definition of a marketplace for a manufacturer as opposed to a retailer. So those are just some additional thoughts that, as you move forward, that might be helpful.
No, they're very helpful, John. Thanks very much. I do think those are things that all need to be looked at in more detail. Absolutely.
This has been incredibly helpful in thinking through and refining what some of our next steps, what strategies we might take. I will be posting a recording of this webinar to our website. We'll also send out materials created by Financing Development. I've sent out this presentation, but we also have some reports we can share. And I think in collaboration with Financing for Development, we'll be posting a blog series on our website, which will take their much longer report and break it down into a series of smaller sections that can be easily digested, and then we could have ongoing discussions during the MDA working group conversations, general meetings. Speaking of which, I believe we will be calling a general meeting for early next week, and we will send out the information via the listserv. Ian, do you have any additional comments, or Alice, do you have any final words?
I don't.
No,
thank everybody.
Ian?
No, me too. I think it was a very stimulating discussion, and I think it's a good job we've set this up, and I think there's a lot of future in it. So I think if we can move on to some concrete next steps, it'll really move the field ahead in this very innovative area. So thanks, everyone.
Thanks, Anita. Thanks, everybody.
Thanks. Bye, everyone. Bye, everyone.
Bye.
Thank you.
Bye-bye.
Bye-bye.